because they chose to cleanly fund their preferred dividends, avoid dilution, optimize taxes, and send a loud signal to credit markets that Bitcoin is a liquid treasury asset. So this week on The Takeover, we break down exactly why that happened, why it matters, and even what Matt Cole at Strive thinks about it all. Eve and Chase, welcome to The Takeover. How are you guys doing today?
I'm doing
Wonderful as
great.
always. Thanks for having us.
That's great. I know at some point I'll call Eve Quinton again. That's just like a little Easter egg for our loyal fans. Sorry about that. But Eve, you want to kick it off and kind of run down what Michael Saylor and Strategy were up to this week.
Yeah, I think you already nailed it in the head with your intro. We had the sale of 3,588 Bitcoin, and two reasons, right? Or two main reasons for that, I would say, at least from my point of view, is one, obviously, that they're sending signal to the market that they can actually sell the Bitcoin and that they want to be able to fund dividends occasionally with this Bitcoin. Going back to the policy framework that they had now 1 week ago with their BTC monetization, where they mentioned that they would be able to sell up to 1.25 billion worth of Bitcoin for such events or actions. So that was one thing. And I think that the second one, and in my view, probably the main one, going back to the S&P credit rating, right? One of the reasons that the S&P didn't give them or valued the Bitcoin at zero on Strategy's balance sheet was because they were not willing to sell it. And initially they did that with the 32 Bitcoin as an initial test, and still kind of wondering what the 32 Bitcoin mean. But I think this was the main sale. This was the main one that should be now, hopefully, when they get re-rated, have an impact on their credit rating, at least on the S&P. And yeah, these are the two, and maybe one small one. This one, I think we still don't know exactly if the Bitcoin that was sold was the one that was bought at a much higher price. So there is some tax loss harvesting as well going on here. So that's also interesting from an accounting perspective, and obviously still yeah, interesting, I think, from a shareholder perspective as well. So these are the main key takeaways, at least from my end, on this sale. I don't know if you guys have anything to add.
Yeah, Josh Mandel raised a great point, and a couple other people were, kind of alluding to this fact. Strategy selling some Bitcoin, at the time when the dividend payments are due on, STRF, STRD, et cetera, all those quarterly dividend payments are coming due. And in their release, they said they also were selling that to pay the STRC dividends for a month, so they didn't have to dip into that USD reserve. Josh Mandel said, this is kind of like a great alternative to issuing common equity MSTR shares to fund those dividends. So in a way, he kind of framed it as a pseudo share buyback. Do you view it the same way at all, Chase? Is that a good framework to think of it as? Instead of Strategy issuing shares to fund the dividends, selling some Bitcoin, help support the common equity during this time.
I think it is somewhat fair. I liked that tweet of Josh's. I think it is somewhat fair to think about it as a share buyback in the sense that the default way of paying these dividend obligations was to issue new shares of MSTR's common equity. And so when you don't do that, you've effectively taken that dilution out of the total stock outstanding. You've let it sit at its current stock outstanding. And so in a way, you've chosen not to dilute, and that is, in this business model at least, as good as a stock buyback. I think it's interesting that the first number sold was 32 and that now it's 3,500. Almost makes me wonder if at the time when they sold 32, they were looking at dividend obligation, a plan to sell for what maybe at the time was looking like 3,200 Bitcoin amount, and that they wanted to be able to say, hey, look, we sold 32, X happened, then we sold 100 times that, and X happened. And I think if you look at how this played out in the market, when they sold the 32 Bitcoin, whether it was because of the news of Strategies, first selling since many years ago, the price of Bitcoin did tank temporarily, or I guess not temporarily. We're still kind of in these lows on the 200-week moving average. And here they are, they sold more than 100 times as much Bitcoin, and price has gone up over the period that they were supposedly selling and after they've announced the sell. So I think, to me, this signals what I already knew, what we already knew, which is that you really shouldn't blame strategy selling 32 Bitcoin for the market sell-off. Those just happen to be two events that look way more correlated than they really were. And I think that, the two order of magnitude larger sell announced today, or this week, yesterday, really, that to me is proof that strategy can sell, that there is enough liquidity in the spot Bitcoin market for them to sell when they want to opportunistically raise cash to pay down the dividend obligations. And one other thing worth noting, it's not just like they paid 1 day's worth of dividend obligations here. This is more than an entire quarter worth of the preferreds and then one full month plus of STRC. And I think it represents less than 0.05% or so of their entire Bitcoin stack. So to me, this is not only proof to the various shareholders in the strategy ecosystem, but obviously to your point at the top, Tyler, the folks at the credit rating agencies, the SEC, S&P 500, everybody that needs to understand that, strategy will make good on their dividend obligations. They can unwind some Bitcoin off the balance sheet to defend those dividend obligations as they need to without totally breaking the company.
Yeah, yeah, I thought it was really interesting. I like your framing of the time of them. Hey, we've now sold 100x the initial 32 Bitcoin. I think there's some logic behind that, and even if that's not what they were thinking, that is a really really great signal to be able to see that. We've talked extensively the past few weeks about their USD reserve runway, so that's another benefit is they didn't issue common equity this week, but they still have that 17 plus months of dividend runway. And I think, we expect that to grow. I think from here, maybe they're going to camp out at about 18 months like Strive does, because that seems to be working. The market likes it, but we'll see. I do expect them to increase that runway for the dividends. And do you think this is something that's just going to be replicated every quarter, Yves? So, I mean, yeah, it'll be the beginning of October the next time the quarterly dividends are due. Are we going to say the same thing? Strategy might sell 4,000 Bitcoin or whatever it takes to cover the dividends.
Yeah, I've seen that question quite a bit on X. Actually, it's interesting, and so in my opinion, right, not saying that it's going to happen, but I think it's going to really matter on what happens with the Bitcoin price. If we keep those rather bear market sentiment and low prices on Bitcoin, and obviously strategy cannot ATM the MSTR common as much, or they cannot sell STRC as much as they would like to, I suspect we will see more sales of Bitcoin. However, if we do see a slight bull market, or if the markets are a bit more in strategy's favor, I would definitely not see any more sales, at least until we see another bear market at that point, because why that was the whole narrative right there. They want to be net buyers of Bitcoin, and at the end of the day, that's what their whole business model is around, is really accumulating Bitcoin. So as long as they can do it, they will do it. And if they can sell those other products, whether it's the common share, STRC, or any other preferred, then I think that's probably the better way to do it. So yeah, really depends on sentiment and price action on Bitcoin, in my opinion.
Yeah, what about you, Chase? Do you have like a expectation or like a preferred way they'd handle that? I think again, it's almost better if there's like some mystery around that. That way, traders can't really exploit, on the clock what strategy is going to do quarter to quarter.
If the market was purely rational actors who all were as bullish on Bitcoin as the people at strategy issuing these instruments, then I think the ideal scenario is to just sell some Bitcoin each quarter and make good on the dividend obligations, but be a net accumulator of much, much more. So I think Strategy acquired this quarter something like over 60,000 Bitcoin just here in Q2, and they sold, a little over 3,000 Bitcoin to make good on an entire quarter's worth of dividend obligations, essentially. So that is some serious net accumulation. There's no reason there needs to be a USD reserve, really. There's no reason to even tap the MSTR ATM if Strategy wants to let the common equity rip in terms of value. These are just additional levers that they have. The USD reserve, we talk about this every week, is purely based on optics and appeasing a group of fixed income investors who are less comfortable with Bitcoin, because if they were as comfortable with Bitcoin, they would just own Bitcoin. But they want fixed income, and they want to know that the instruments will remain liquid into the foreseeable future. But to me, this could be a longer term strategy to inoculate the market and move towards what Brian Brookshire thinks is the ideal capital structure here, which is just a single preferred. In this case, it would be STRC over the long term, the Bitcoin, and nothing else. No USD reserve, no other preferreds. You've got your digital credit instrument. You've got the Bitcoin that backs it. The digital credit is allowing you to accumulate more Bitcoin than you have to sell down each quarter to make good on the dividend obligations. And it's a super clean balance sheet, and it still works. And I think that that's what people don't understand about Strategy, is that this strategy works even if they never raise any more digital credit issuance, even if they never tap MSTR ATM again, even if they got rid of the USD reserve. Now, it might take years of education, but I think we know that Saylor and team and the asset that they're acquiring, this is like 100-year, 1,000-year timeframes that they're working on.
Yeah, I think that's really well said. And it's funny. Like, we knew this was coming. Again, the timing's always uncertain of when Strategy would make a sale. But there still was a bit of a freak out on Twitter. But I think it was more subdued than it otherwise would have been had
Well,
this
it's
been a
because
surprise.
price, right? It's because of the price, right? Like, so much of what happens on Twitter is people coming up with a narrative to explain price. And when you can't think of who's moving the market in which direction because there's no clear evidence, then you grab to Strategy and Saylor because they're the biggest gorilla in the market. But this is just a very clear example that price drives narrative on Bitcoin Twitter, and that it probably has very little to do with the actual supply and demand of the underlying commodity, trading on spot markets.
Yeah. No, you're right. I mean, yeah, that's a really good point. Yeah, Twitter isn't reality. It is interesting how I think engaged the Strategy shareholder community is on X. It's seeing these companies so active on X and communicating with shareholders in real time. Do you think there have been times that sentiment on X has negatively impacted Michael Saylor or the teams running a Bitcoin treasury company and made them overreact to like Twitter sentiment rather than stepping back and looking at the market?
Yeah, I have a couple of thoughts here. So I had Ryan McGinnis, original Quant Bro, on my podcast yesterday, and we were talking about how the transparency of Strategy leads to a lot of this kind of fervent conversation and narrative creation on Bitcoin Twitter. And Saylor says this himself, like, if they didn't create these transparent metrics at strategy.com that update every 15 seconds, if they didn't put out the weekly buy or sell update, the dot chart, all of these things that we've become so accustomed to as people following the company, if all they did was what they do have to do at a minimum, and in their quarterly earnings report, they put out, hey, we increased Bitcoin share by X, we acquired net X amount of Bitcoin, we sold X amount of high cost basis Bitcoin, there would be so little to talk about. There would be so little to criticize here. But people are looking at this on like an individual week by week basis. And it's only because of the transparent nature of Strategy's balance sheet, which is also only made possible because of Bitcoin's mark to market 24/7, This is all a result of a company trying to be maximally transparent. Now, people will say to that, yeah, but Saylor said this and guidance has changed and et cetera, et cetera. But the metrics are transparent. The metrics have remained at your fingertips at all times. And that's what creates the conversation week to week about, dilution versus accretion versus MNAV versus CEBE, all of these things. Like if we just sat and waited for strategy to announce at the end of each quarter what they did, these announcements would be nothing but positive, nothing but bullish, because en masse, if you zoom out and you look on a quarter to quarter basis, it's very clear what they're doing. They are net accumulators of the most finite supply asset on the planet.
Yeah, that's a good point. I'm curious your take on that, Eve. Like, you know, instinctively, I think we all value the transparency. I think transparency is like something every shareholder wants from their company. Um, do you think the weekly cadence of announcing these Bitcoin buys is a net positive for strategy? Is there a better way of doing it? What if they just reported quarterly? What if they reported once a month? Do you think that would like I get why, like, for PR perspective they want to announce these Bitcoin buys, um, but does it also kind of encourage these bear narratives that can crop up? And I do wonder if that can you know damage sentiment at all.
Yeah, that's a really good question. I think there's a lot of pros and cons, right? So really, maybe we can go through them a bit. So I think obviously they've created this culture of transparency, as Chase mentioned, especially with the metrics and so on. I think we've seen as well in the last year, going back to their MNAV guidance and STRC guidance, I think there was a bit too much transparency in certain aspects, right, from strategy, because this also just kind of attracts all the like players, like the bigger institutions, to do some shorts, some arbitrages, and so on. If you already know what the company is going to do on the other side, and it becomes really easy for them to make some trades, right? So you need to find this really fine balance between like having transparency, but also putting the market like tiptoeing and being nimble and being able to surprise the market so that you don't get caught off guard as a company. So I think the metrics in general is definitely a great thing to see, especially for the investors, because that's obviously the company is also building itself on trust, which is the main aspect, and all of this all obviously builds this trust. Regarding the frequency, that's an interesting one, right? Because we see obviously strategy now, they have now implemented this weekly frequency, which I think it's good for them because they're obviously always in the market doing something. I don't think that's too negative. I don't know, maybe you guys see it another way, but I think I like the as long as they're making something, it's good that they're communicating. Like, for example, going back to the policy as well, the framework that they had last week, they had a pretty good communication. It was not overly detailed. I think it was vague enough that they have the levers to pull and not bring in again all the attention of shorts or arbitrageurs that can, oh, they're going to do exactly this, so now we can play this game, right? So I think they again need to strike a balance, and probably the best way to also look at what happens, for example, if you look at Metaplanet, they don't communicate as often as they used to, right? They did quite a bit last year when they were also buying a ton of Bitcoin and so on. Obviously, if there's no need to communicate, then you don't communicate anything. And I think Metaplanet has done it well right now with the communicating basically on a quarterly basis when they have those accumulation points and when they have to communicate to the market. It works to some extent in their favor because we see that they're accumulating quite some Bitcoin. On the other hand, the stock has been severely punished. So yeah, I don't know if it's completely due to obviously it's not completely due to the communication, but there are some side effects to take into consideration. And yeah, I'm curious to hear your thoughts on this one, actually, Tyler and Chase.
Yeah, I think again, I think communicating these Bitcoin buys is certainly something they should continue to do. I just wanted to kind of like workshop that. Is there a negative consequence to reporting so much that over the first quarter 1, quarter 2 of this year, they were able to buy so frequently and in such size as STRC was, really hitting its stride. I do wonder if there's there's going to be a letdown effect if they're not able to accumulate, for a month, 2 months at that same rate. We're kind of seeing it now as, STRC's price has gotten punished and the MSTR common stock, is way down. Of course, that's derivative downstream of Bitcoin's price. But I do wonder if, it's like they just are susceptible to losing steam when they're not able to access capital markets. Again, I don't think there's anything they should change. I'm just kind of thinking aloud here in real time about the pros and cons of this transparency of reporting.
What I think is it's like all things with Strategy's balance sheet, it's a trade-off, right? So what is the trade-off to going to like a quarterly earnings report and scaling back all of this transparency and the weekly updates? Well, now you start to look a lot more like something like 21 or BMSTR. I mean, what happens when you look at these Bitcoin treasury companies that do not have something to report, do not have some form of accretive or at least arguably accretive operations ongoing? They get punished because the alternative here is always for a Bitcoiner to hold spot Bitcoin or the ETF. And so you have to, as a Bitcoin treasury company, you almost have to justify the volatility of your common equity with ongoing operations. You have to justify why they shouldn't just hold a spot Bitcoin ETF or spot Bitcoin. So to do that, you have to do two things. You have to outperform the underlying, but you also have to constantly be communicating activity because yeah, anybody can hold one Bitcoin. One Bitcoin is one Bitcoin. People are holding this because they believe the activity on top of the Bitcoin can be accretive over the long term. And so if you're going to own Strategy and they don't look like they're doing too much month to month, week to week, then you're going to opt out of holding that stock because the volatility is nerve-wracking. Bitcoin volatility itself is like it's an open question to many if the volatility is worth the return to many who are not already like full-on believers of the asset class. So yeah, Strategy and any Bitcoin treasury company, I think, has to justify their volatility and has to justify why they have a chance of outperforming the underlying. And the only way to do that is to be very active and to communicate that activity very frequently.
Yeah, I largely agree. I think, and I do wonder. I'm eat, sleeping, and breathing BitcoinTreasuries.net. Obviously, working over here and always tracking the leaderboard and what's going on. Strategy's been able to aggressively accumulate this year, with great frequency. We've seen Strive also. It certainly was made easier by them having their digital credit product, SETA, which also, attracted a lot of capital. Just scanning through this list, there's been a few companies that have accumulated more than others during this phase. I know Orange BTC has been, accumulating small bits of Bitcoin quite frequently. Their stock's been trading, I would say, like any Bitcoin stock, kind of flat over the last month. So I don't see necessarily a correlation, in the short term on more frequent Bitcoin accumulation and share price necessarily. But I do wonder, like, is there a marketing aspect that's really important to buying Bitcoin at a regular cadence? Because obviously capital markets have been closed to a lot of these companies right now. Yes, they could issue more common equity shares to buy more Bitcoin, but that's just going to further tank their share price. If Nakamoto were to issue shares or something, they've been one of the famous ones. Getting their stock has gotten really clobbered and is trading way below its net asset value. I do wonder, is there a case to be made that some of these smaller Bitcoin treasury companies should, when they're able to access capital markets, keep a little bit of dry powder around so that they can keep a regular cadence of Bitcoin buying and DCA. I don't know, just again, kind of workshopping. Like, I'm sure there's like some really like a lot of analysis going on at the marketing departments, in the in the Bitcoin strategy departments of these companies to figure out, what's the best way to do this. Strategy, I think, is still doing it the best. And if you're a Bitcoin treasury company trying to fortify your balance sheet with Bitcoin and generate a return for common shareholders, is there a case to be made that what strategy is doing with its frequent buys, reporting those frequent buys, is something that you just like have to scratch and claw and imitate?
I'd asked Richard Byworth this on a podcast like a year and a half ago. I asked him basically, if I gave you a Bitcoin treasury company that had zero capital, if I gave you $100 million, would it be best for you to go buy in the market $100 million and announce that? Or would it be better for you to like buy $1 million 100 days in a row? And his conclusion was that it would be better to buy $1 million 100 days in a row because of a few things. One is each, on a percentage basis of the total assets in the company, it is more meaningful. So you can signal growth in Bitcoin per share and signal growth over a longer track record to investors. But you also give an investor base time to believe in you, participate in you, experience the appreciation of your stock, and then, gain commitment to your stock over the long term. So for these smaller companies, the frequency, I think, is most important, not only to signal to the market that, hey, we can still access capital markets at any time of the year, even in a bear market, but just on a kind of the math, the way it works out, and the way that you're building an investor base. You can't build an investor base in two dots. You need to create kind of that line, a track record over time, and that happens through more frequent, consistent accumulation.
You're muted, Tyler.
Sorry, go ahead, Yves, if you wanted to.
No, just maybe to add on to Chase's comment. I think I saw that podcast, by the way, with Richard Byworth, because it sounds familiar. And yeah, obviously, as you point out, if you're a small Bitcoin treasury, it's just easier later to have some pretty nice KPIs or metrics that you can grow and show growth. Maybe one point to this is obviously now we have also these instruments, SETA and STRC. And for example, we have Oranje BTC who have STRC as well in there. So that's also now something that you can play with, right? Especially if you're a Bitcoin bull and you want to keep some liquidity and maybe do a structured balance sheet that is with some maybe mid-duration liquidity like STRC or SETA for that matter, and you obviously are in a jurisdiction where it makes sense, right? Again, coming back to some jurisdictions like in Switzerland, for example, if you have a balance sheet, it doesn't make sense to have an STRC or SETA because of the strong Swiss franc. But definitely, potentially a Metaplanet would make sense to have some additional liquidity in there. And I see potentially probably in Brazil as well, it does make sense. So there are now various ways that you can play around to structure your balance sheet with all the 100 million, hypothetical 100 million that you proposed, Chase, and maybe even accumulate even more that way, right?
Yeah, I think so. I was just looking at Orange BTC's dashboard there, and it looks like they still got 3 million in cash, US dollars, and of course they had that promotion around Brazil in the World Cup where they were buying, Bitcoin every time Brazil scored a goal, and they certainly added even more Bitcoin than Brazil scored goals. Yeah, I think those things are interesting. I think, yeah, being like at least in the Bitcoin ecosystem, being in the news more frequently out there buying Bitcoin, especially in a bear market, is just like a really good signal. I can see the other side of the coin, to take the other side, of Richard Byworth's position is that, is a mainstream financial news outlet going to pick up $1 million Bitcoin buys here and there, or are they more likely to cover a story when a company's out there buying, $100 million, $200 million worth of Bitcoin? I think that's something that has to be considered. I'm curious what, the investment bankers think about the whole thing. And obviously some of the guys who are on the back ends of these deals, and like Coinbase's prime brokerage, and anyone else facilitating these trades or ATM issuance want to see more frequent selling because they can clip, fees off each transaction. So yeah, I mean, there's a lot of moving parts, lots of things to consider, and I'm sure these Bitcoin treasury companies have a lot of like outside voices in their ears about how to best do it, and yeah, I mean, I guess we get to see, hundreds of companies trying different strategies in real time, and we'll have a lot clearer picture of what works best, I think, in 5 years. And it's always going to be downstream of strategy.
Yeah, I
Yeah,
mean, one other thing, like if you think about what is strategy's superpower, if they're able to keep it, and they don't always have access to this superpower, but when it is available, it is, selling MSTR common equity at a premium. And how are they able to do that in size? Well, they need to have a lot of trading liquidity in their common equity. How do they do that? They need to remain interesting. They need to remain top of mind in the market. They need to be the number one name in the New York Stock Exchange when people want to place a trade in either direction related to Bitcoin. And so I think that that's probably the number one reason why they don't just have a quarterly announcement, is that they need to keep the stock interesting so that there's liquidity, so that when they have the premium to MNAV, they have all the liquidity they need there to tap the ATM and raise funds in a way that doesn't actually move the price.
yeah, that's a really good point. Like even like marginal vol traders, options traders, strategy is going to be near the top of the list in a lot of those screeners. So like, yeah, any excess capital they can attract to trading in their common stock, I think is really good. And yeah, that's a really good point. Yeah, just kind of wanted to workshop that out loud. I'm just looking at this chart of Strategy's acquisitions here since the inception of their Bitcoin treasury strategy that started in August of 2020, and it's something familiar to obviously all of our audience, and you guys certainly started off slow. They were able to buy a lot of the tops, and had some decent Bitcoin buys during the doldrums in 22, 23, but they really blew the doors off things at the end of 2024 when Bitcoin's price ripped. In November, they were included in the Nasdaq 100, and liquidity and volatility was just absolutely ripping. And then there was that question. It's like, what's going to happen when Bitcoin's price falls? And we saw what happened is Strategy has been able to accumulate tons of Bitcoin. There's been momentary periods where they haven't been able to accumulate much, but um, you know, STRC was that other vehicle that was just able to attract capital in the down market. And I'm curious what you guys expect this to look like in the future. We talk about it, almost every week on the show. It's like, is STRC going to perform even better in a bull market? And we have some mixed opinions on that. But um, I guess is this new regime that kind of started with the launch of the Bitcoin ETFs, the better regulatory landscape in the U.S. Is Strategy going to be able to continue a pretty frequent cadence of these buys through any market condition? I don't see any reason that jumps out to me why they wouldn't, but I am curious your guys' take on if this is sustainable regardless of Bitcoin's price moving forward.
Yeah, maybe I can jump in here, and so I think we've talked a bit, quite a bit on this show, and obviously in different podcasts, is that everything is, or that STRC and SETA and all these other preferreds are a bit derivatives of Bitcoin in a sense, and obviously sentiment is the key driver of this, and we've seen that over the last couple of weeks and months, what happens when the Bitcoin price drops. So obviously, I think the truth will be that when it reverses, these instruments will also perform very well. Now the question is, what happens in a bull market? Do we see this insatiable demand on all of these prefers or not? I think we see quite some demand. I don't know if they'll be able to ATM it constantly, but and also what happens with the amplification level as well, right? There's a limitation as well how many or how much of these instruments they can also ATM because of the constraints that it will have on the balance sheet. You don't want to have an amplification of 100 or above 100% as well. That would be for sure way too extreme. Probably some other players might come in and try to do something like this, but we know that that's probably playing a bit with fire there. So definitely, I think we've seen how they perform in a bear market, and at least again, going to my opinion, they've performed very well, considering everything and the price action. So yeah, I'm just looking forward to the bull market because I think it's going to exceed our expectations, or at least mine.
Yeah, we should expect that strategy buys more with their common equity ATM and STRC during the bull because price drives sentiment, and then sentiment is the most important factor here because ultimately they don't want to hit the MSTR common equity ATM unless they have a premium to their MNAV, which happens when sentiment is good, near term and forward looking outlook on Bitcoin price is positive. And then the same thing with STRC. I mean, theoretically, they could have enough USD reserve that even in a bear market, their credit instruments are hitting and trading above par and they're able to raise capital. But even their credit instruments are always going to be more attractive when Bitcoin is looking very positive and the over collateralized nature of the instruments is looking even better into the future. So, you have to expect that sentiment flipping positive is what flips back on their ability to raise capital in mass, and that really they just have to pick their spots in the bear until sentiment, which is really driven by Bitcoin price, which they don't have direct control over, at least not at this stage of their participation in the market. They have to wait, and that's why a lot of MSTR shareholders and people that we know are even saying, hey, maybe strategy should just sit on their hands for a quarter and wait till Bitcoin sentiment flips bullish again and then ramp up again. Like maybe we should just cool it. They don't have to do anything. They already own the most Bitcoin in the world by a long shot. They could just take a quarter off. But ultimately, I think it all comes back to keeping the stock interesting. I mean, even these things that look negative in the near term, all of this is just driving awareness of their model of the company. And when the bull flips, positive again, then everybody that's been following strategy and talking negatively on it, well, a lot of people are going to have to eat crow. A lot of people are going to be forced to re-examine their assumptions. And a lot of people are probably going to come out of this in the next bull and say, you know what, I was wrong about strategy. And because I'm now flipped in this direction where I'm bullish on strategy, my conviction is stronger than ever.
Yeah, really good points. Got me thinking, and someone in the chat was talking about it too. Is this an opportunity, when Stretch has been under siege and tested, and you're saying, Chase, that a lot of people are saying, why not slow down for a quarter? I think that's something that might be hard for Saylor and team to do, given their enthusiasm for buying Bitcoin in this down market, at least on net, right? It is difficult, but in the chat, someone was saying, why doesn't Saylor use this moment to open a derivatives desk and sell those, cash secured puts or sell covered calls or some sort of, financial derivative products, maybe it's futures or something, to generate, I guess, some more runway or generate funds other than the ATM on their prefs or the common stock during this time. I mean, obviously, they're never going to be able to raise as much capital as utilizing the ATM programs doing that unless they're putting a massive amount of their stack at risk. But do you think this moment right now is like a decent time for them to examine those strategies and maybe play a little in the derivatives markets?
I guess I would say that with each incremental action that they take that is net new, the communication to the market just becomes even more difficult. And like we talked about this is where Strive is excellent right now, is the simplicity of the balance sheet and the story. And so to introduce a whole nother whether it's even positive cash flow, free cash flow producing, if you have to explain it at end and it takes forever to educate the market, that could still end up being net negative to the instruments. If people don't understand something, you can be right, but it can still hurt you in the near term. And to try and do that now during the bear, when there's already a lot of negative narrative flying around, it just feels like fuel for the bears who are going to say, oh, look how desperate they are. Now they're doing this. So I'm not a huge fan of that. I do think that there will be a lot of accretive M&A in the future, especially if strategy, goes to bitcointreasuries.net and starts eyeing some of these companies that are trading below 1 MNAV and have, in some cases, really strong executive teams and Bitcoiner brands with their own podcasts and media setups. I could see strategy acquiring essentially discounted Bitcoin, and I could see those Bitcoin treasury companies accepting an under mark-to-market offer against their Bitcoin treasury because they see so much upside in getting paid out in MSTR stock and being along for that ride. So that would be the move that I think hasn't happened yet, but that seems a lot more appealing, especially some of those companies that have free cash flow, right? So that I would be on the lookout more for strategy M&A into the future than, covered calls and shorts and puts, et cetera.
Yeah, the reason I think that M&A hasn't happened to the scale that I initially thought, even in the back half of last year, after the Strive and Semler merger, that kind of was the first real bigger deal in the space that allowed Strive to hit that critical mass of Bitcoin so they could launch their pref ultimately. But I think the reason is a lot of these Bitcoin treasury companies really do have conviction in Bitcoin. Certainly there's some that are they're more tourists, but the ones with the bigger stacks that might be good acquisition targets for a company like Strategy, I think are so hopeful and optimistic that the price and sentiment is going to rebound in their equity when the next bull market, really hits full steam, which could be a ways off, right? Still, that they're hesitant to even really start talks on that. So, um, let me say it differently. I think we really see more chatter about M&A in this space happen if these Bitcoin treasury stocks continue to trade at a discount, even in really up markets. And I think we could be still yet another year or two away unless a company is really distressed, on the operating side. But I think most of these companies have pretty slim, um, operating costs that they can kind of afford to wait it out. But you highlight a good point. Um, these companies also really are believers in the Bitcoin treasury strategy. They're obviously following the Saylor playbook and wouldn't be doing this if Saylor didn't model it. So getting paid, with equity, and if they can be part of that Bitcoin strategy team, some of the key executives potentially, I do think that could be something appealing. Whether or not strategy and Saylor, want to do it, I don't know. Like economically, it makes so much sense. Um, but Saylor has said, you want to be laser focused on one thing, and if you take your eye off the ball and get too bogged down in the M&A, I mean, yeah, that could blow up in your face for some unknown reasons. There's when you're purchasing a company, you're not only purchasing their assets, but any liabilities and future liabilities that could come. So there is some risk there, but if anyone could do it, the team at Strategy certainly can. They've got the scale, they've got the size, and if they need to outsource some of that, the legal side of things, they're well suited to do it. I do want to go back to the comments. Cletus88, here we are talking about strategy, almost at the top of the hour here. I swear we'll get to some more Bitcoin treasury companies at the back end, but Cletus was concerned. He's a retail investor in STRC. And he's like, I knew the risk, but going from the 90s to the low 70s, really took him for a turn. And he said, I really want to count on getting my principal back. And he thought that, strategy slamming the ATM on STRC the moment the price goes to par or above par by a penny is something that they could reconsider. Like we've seen that Matt Cole and Strive put out that survey and then issued guidance that they're not necessarily going to issue you know the preferred equity stock as soon as it hits par. What's your take, Yves, on, I guess, that slight change in guidance from Strive? Was that a good move? And is it something strategy do you think we'll adopt now that we see a little bit of price dislocation? STRC is trading, around $90. SATA has been trading $97, $98 and closer to par. Obviously, there's a lot of factors at play there, different balance sheets, different dividend frequency. But yeah, I'm curious if that's something that can, one, prevent price dislocations and stretch moving forward, and two, if it's something that could help STRC get back to par more quickly.
Yeah, I'm glad you brought this point out, or the whoever wrote this comment, because that's something I wanted to discuss. Right, we saw last week Matt Cole come and ask the question whether they should be ATMing SATA at 101 penny, or they should let it run to exactly again wreck the shorts, because we also had this post from Jeff on SATA, which mentioned that there was a large short position on SATA, right? So there's definitely some games being played behind the scenes. And again, it goes back to our previous discussion on transparency, right? If the players know exactly what strategy and Strive are going to do, it's easy for them to play these games. So having or making them think twice about these types of games, I think makes sense. And I'd love to see SATA bounce over 101 penny just to wreck some shorts. If it makes it happen, then yeah, I'm all for it. And I think it's a good decision. And I hope that strategy also takes this into consideration, because these products are supposed to be trading at low volatility. So if you, and on top of it, as they grow, right, as STRC and SATA grow in liquidity, that brings more players into the game and a lot more institutionals with deep pockets that can play all sorts of games on top of that. And I suspect we haven't seen the end of the volatility because of it, because as they grow, then yeah, then we're going to see probably more deleveragings, more short plays being done on these instruments. So I think strategy and Strive need to defend this power in certain ways that allows the price to run basically on SATA and STRC. So definitely something to be on the lookout. And sorry, just before, I want to go back to the previous comment and add on to Chase on the utilization of the Bitcoin and the USD and the cash secured put strategy. So Saylor already came out a while back saying that they want a simple structure and they want a simple messaging, as Chase points out. And in a sense, we've seen that the USD reserve and the Bitcoin that are there are being already utilized. And how are they utilized? They're basically the collateral for STRC and all of these preferred. So they're not sitting idle, in my opinion. And that's what Saylor also has mentioned. This balance sheet is being utilized and it's fully utilized. Now, if you think of cash secure puts, you think Metaplanet, right? And why do Metaplanet do that? It's because they don't have as much, they have some preferred, they have a bit of Mercury, but very small amount, right, on their balance sheet. But most of these cash and Bitcoin that they have on their balance sheet is not being utilized. So for them, it does make sense to have a strategy where they can do some income generating based on cash secure puts. And if I'm not mistaken, they're also doing some covered calls and things like this. So you need to differentiate the different strategies. So strategy is playing with the digital credit, and that's how they're utilizing their balance sheet. Metaplanet doesn't have digital credit, so they're also using this to have some additional income generation. And I think it's worth putting both companies in contrast when you think of these strategies, right? So just a point from my side. Sorry for the long rant. Back to you guys.
Sorry, long rants is what we're known for here. Come on. Yeah, speaking of Metaplanet, let's just talk shop on them really quickly. They recently announced their buy, so they've like you said, they've been pretty quiet. They just have 2 buys this year. They've still added, almost 8,000 Bitcoin to the balance sheet. They added 2,823 Bitcoin, which is, 7% increase on their stack. They're now at 43,000 Bitcoin. And yeah, I mean, is that just the nature of, operating in a different capital market? And, because they were the darling, right, of I would say last year. They were one of the really big overperformers. They traded at a huge premium to their underlying Bitcoin. There's a lot of exuberance from Metaplanet, in the Japanese markets because they provided a vehicle that was tax advantage compared to holding spot Bitcoin, and that was a big unlock for them. What's next for Metaplanet? Like, I think they've got a great team. Dylan's a great communicator, a great Bitcoiner, and Simon has extensive capital markets experience, and they've got a really motivated shareholder base. But again, like all these Bitcoin treasury companies, sentiment's been down. What are next steps for a Bitcoin treasury company that's not strategy, that doesn't have a pref? And I guess what's your take here, Eve, on is it just, do they need to be laser focused on bringing more of this preferred equity to market?
So I think the team is already laser focused, at least in Japan, to bringing this digital credit, right? So they have already the Mercury, but it's not trading. They have a small amount on the balance sheet currently. And I think it's taken them quite longer than they expected to come out with these products in Japan because of the regulatory aspects. But also they need to, from a regulatory perspective, also have an income generating business to fund these dividends. They cannot just sell shares or basically ATM, any kind of product, just to fund these dividends. So that's why they also need to make sure that they have a proper business behind the scenes running, and that's what they've been working on. You can see it with their latest acquisition of SIBO, which they're going to rename Metaplanet Securities. They also have a few other they have entities like Metaplanet Asset Management, I believe, and a third one, which I don't remember on top of my head. And they're building the infrastructure basically for all of this through their different entities, as well as they have changed quite a few members of the board. So there's some changes there, and you see the direction that they're taking, definitely the right one. And obviously it's a sleeping giant. I think Metaplanet, once it starts roaring again, it's going to be huge due to the environment that they have in Japan, right, with the low rates that we've mentioned plenty of times. That's one thing, but also because of the foothold that they have in the US. I think they're planning also a play in the US. There's been a few rumors floating around whether they also bring a preferred in the US or something like this. And there was an interesting take on one of the latest episodes that I had with Peter Dwan on the One Share podcast, where he mentioned that potentially Metaplanet could even actually lend some cash at a very low rate to other Bitcoin treasuries in the US market due to their foothold in the Japanese markets as well. And that's an interesting one. I haven't fully fledged the whole idea, but there's various plays that they can make, right? Because now they're sitting on market number one, US market, biggest one, and then markets number two, Japan. And with the environment that they're playing, I think they have a really interesting future ahead, Metaplanet, whether it's in the Japanese or the US markets.
Yeah, it'll be really keen to market that. Just really quickly before we wrap, I want to run down, the other buyers since our last episode. We've got Strive here, of course. They added 17.76, a nice nod to the American Revolution this last week, just adding some Bitcoin. The team over there continues to meme so well. We've got CleanSpark that's been, net adding. They're mining Bitcoin in there. They've been net adding Bitcoin to their holdings. They're almost to 14,000. We've got American Bitcoin, which added 500 Bitcoin to their treasury. They're now at 8,000 Bitcoins. They've talked that they're unlikely to launch a pref, but the Matt Prusak, the CEO over there, has talked in many interviews about them, monetizing that stack through capital markets in interesting ways. So there, I think in the U.S. markets, they're one we could see maybe make that first step towards selling cash secured puts or doing some sort of futures contract or lending or something like that. We've got hyperscale data, which has been slowly stacking Bitcoin as well, and they're up to 900. It's good to see not all the miners are out there selling their Bitcoin during this bear market, and the ones that hold on to it, I think, are going to be rewarded in the upcoming bull market. But yeah, just really exciting stuff. I think it's going to be fun to monitor. Do you have any parting thoughts here, Chase, for us to bring us home? I see you just shared a tweet here in the nest.
Can you pull that up for a sec? I think it's worth highlighting because this is something new. I'll wait till you get it up for the viewers here. So Michael Saylor has been posting these dot days on I believe always Sunday evening ahead of the Monday announcement of a buy. And until now, whenever we see the dot chart, it has been to signal that a buy announcement is coming on Monday. We got a dot chart on Sunday, and instead of announcing a buy, for the very first time, we didn't get a buy. In fact, we were announced a sell. So I think what's interesting here, and it plays to kind of the Matt Cole and Jeff Walton conversation about, how do we keep arbitrageurs from knowing our next move? Maybe we allow SEDA or STRC to run above par. I think what we saw here this week is worth noting because it was almost like a head fake, in my opinion. It was Saylor making the market think that he was coming to market on Monday to announce another big buy, and instead it was a sell. And I think that this might be kind of a first of future head fakes. Because if strategy is going to remain this hyper transparent company that, where all the metrics are known and people can kind of reverse engineer the model and start to guess at what the next move might be because it's the maximally accretive lever to pull, I think head fakes like this, although I'm maybe not a huge fan as somebody who wants to trust Saylor at his word as a shareholder, I understand it. And I think that we should get perhaps a little bit more comfortable or a little bit more inoculated to these types of head fakes going forward. And just worth calling out also as we wrap here, because this is another reason why folks that are tuning into the show each week should stay with us, because not only is the landscape changing constantly, but the operational approaches by these management teams is changing week to week. Like there are new things that have never happened before happening every week. And we almost concluded this episode without even mentioning this head fake. Like this is a meaningful thing. Like now, if you see the dot chart on a Sunday night, you don't get to just inherently trust a buy order announced on Monday. Like now you have to second guess yourself.
Yeah, really good point. And it's great to see them continue to iterate on this. Thank you guys for those of you who did stick around for the whole show. Really appreciate you guys tuning in. Thanks for jumping in the comments. We'll try to get it to as many of those as we can every week. But for Chase Palmieri and Yves-André Graf, I'm Tyler Rowe with the Bitcoin Treasuries Takeover. We'll see you next week.